Hi, this is Julie, J Auto Trading Strategies. I'm going to look at the VIX and the ES today and talk about what's going on with the volatility. We're at the lowest volatility in quite a while. Um, Printed at 1455 on Friday. So the white lines are weekly levels. The blue lines, 23 days, and 37 are the red. And so we're at very low volatility for quite a while. You can see that when the volatility compresses, it stays inside your weekly levels, and in fact inside the inner part of the weekly levels a lot of the time. We'll catch those support resistance. Here was a 7-day close. Often that'll catch price. Just pointing that out. And so you can get a spread pretty easily using these levels. January 4th of 2022, we came down close to the 1455 but did not tag it. We had to wait till we got to November 12th, 21, where it came down, and it didn't really even touch it. And then October 25th of 2021, um, but you can see that price stays within these bands pretty well. And if you're wondering why I selected this crazy period that I did, if you look at the VIX CBOE calculations, you can go to their website and look at it. I don't know if I'll be able to find the exact. No, that's not it. Yeah. This. So you can come to their website and find it. It is designed to take calculations no less than 23 days and no more than 37 days. So I have that 2337 on here with a weekly level. They also use a 30-day to balance it, but we can add a 30-day 3 on here. In fact, if you would like right now to put another distribution, you can just nest them one on top of the other. I have saved some templates for just PT3s by themselves, so I can choose this PT3 orange. We'll make the 30-day orange, and then just change your distribution. We'll put this on the close, and then I will go back and add another 30-day orange on the open. And just like that, we've got a 30-day now. So let me add that. So if you're running a spread, what you want to do is strangle outside these levels, and to get, you know, a spread each time at the outermost level is unnecessary if the vol is low. I mean, why continually sell vol way out here if you've been compressed and staying inside, especially this first white level, right? The 7-day and these weekly levels. So as long as you're, trading inside these levels, there's no reason to sell the premium way down here, right? Unless you, expecting a huge, sudden 500-point move in one day. It happens, it's very rare, but most of the time you're not going to be in trouble for that happening. So you can bring your risk in, is what I'm saying. And that's exactly what the professional um, market makers, hedge funds, and dealers do. So, brokers, dealers, they'll bring their risk inside. So, when you hear me say they've moved their risk from the ones out to the outer levels, it's when that gets challenged and breached. They'll move their risk from these daily, weekly, monthly levels out, but they'll keep it at the beginning closer in and to be able to get a higher premium rate. So we've got to go back a while to get this low volatility. And the reason I point this out, here was some additional touches and below the line even in 2020 briefly. So it can go low, and it has gone low, but it's not often. Most of the time it's on the other side of that line. And so we've got to be careful because we're getting down to these lower white lines, 1303 and 1336. So we're getting kind of close within, I would say a couple of sessions from landing on that. And that might get us, a reaction from the market to increase the volatility and push it back into the other side. I'll see that happen when you get to the bottom of these ranges. It will then change direction, go up to there and come back down. It's like a little pattern up and down inside these ranges for the volatility. For the ES, same thing. I don't have the 30-day on here, but when the volatility is going low, then the ES is going to be going higher, and that's the pattern that we've been in for a while as the market has floated up. Short vol, long ES sort of market is being supported. So again, when we reach these upper levels, you might be expecting to see that reaction coming back down. Doesn't, always happen. Nothing, is permanent. You have to put the hypothetical disclaimer on that. Just because it's, happened in the past doesn't mean it's going to happen in the future. But it could break the line and then go to these outer bands. And that's when the risk would be moved from the one to the outer bands. What helps me indicate where I am on the volatility is the other component to this, and that's the oscillator. And I can put the oscillator to get my points. So I'll know on whatever time frame I'm looking at, this is a daily, how many points to expect for that range. And there was an interesting post I saw somewhere else on Twitter about, 2023 and 2022, the point range in comparison. And you can really see the dramatic decrease in range in 23 compared to 2022. Of course, 22 they were marking the market down, and now they are selling the vol to contain it and allow very small ranges to go sideways and float up. And you can see that on the value, the threshold value on this bottom oscillator. You can see how low, low, low we have been. We've been at 22 right now, so it's below 1.5 threshold, which is, below 2. So once you get above 1.5, then you can start, expecting that volatility is back in the market and widen your positions, widen your ranges intraday. and get more selective at your entry, maybe taking advantage of that retracement back in on wide volatility days. But the slope, again, of the oscillator is also very important. And this you would have to have with the indicator. Um, and that is another benefit of having the indicator, because you can really get these thresholds and slope and get the plots from that for your own strategies. So I use Bloodhound and Blackbird to capture the plots from these indicators, but you can also just use your own strategy, language, platform, or code. So it were the I guess the moral of the story is the volatility works very well with the ES. It is opposite, and it's running about 2 to 1. So 2 points for the VIX would be 1 point for the ES, approximately. Let me put the PT2 on here. And you can see we are at ridiculously low volatility levels here, 47.25. I mean, that's less than 50 points a day. That's pretty low. And again, we're at 43, 60, 43, 44, 43.71. So for some resistance. So I like to go over to Quick Strike and look at my volume for those levels. And so I'll look at Monday's contract and go to my Black-Scholes on the settlement. And 42.90 is going to be our mean. And so I'll want to put a line on my chart for 42.90. You can change your so that's exactly where we are currently parked. It's amazing how this works, right? That's how it works. So that we're in the middle of the distribution for the implied volatility right now. So, and you can see that could be balanced with the let me put a Fibonacci on here. So about 41.66, or excuse me, 42.40.19 is the middle of the I was going to say weekly range. Yep, 7 day. So 42.40. So between 42.40 and 42.90 would be my bull bear bar. And with an annotation that we're expecting a reaction if it reaches our target at 43.60, 43.44. So I'm going to bring back the and look at 43.60 and that is outside the 2. That is in the 3s. So we'd have to really get up there. 43.40 is at the 2-3 line. So 43.44, 43.40, that first line could easily be hit if we get high vol between the 2 and the 3. But since we're at the mean, we need to get some volume estimates. So let's pull up our volatility and see if there's printing anything. We don't have any volume yet. 42.50 looks like a put wall, but that, of course, that's where my 42.40, 42.50. So it does look like a put wall's formed, but this is the weekend, and I can hear Nick right now saying the data's not loaded, but so we have to be very careful here and check it, of course, later. But 4300 has a big call wall open interest. So that may provide some resistance 10 points higher. And outside of 4305, you're leaving the first standard deviation of that IV. See that little shaded area? And that's your 25 delta. So we might get, a little bit of resistance at 4300, 4305. If we break that and go higher, then you see how it slopes really fast going out. And we would be looking at that 4325 area for another call wall. And that second standard deviation on the IV, and then going into the third would be 4340, where my outside level is. So their level at 4340 is just a little bit under mine. So that may wait for the end of the week, or we'll see what happens. But the volatility is so low that I am not, um, expecting anything while it is this low. It will have to start breaking and sloping higher for me to get, a belief that the sell-off is really starting. So if you have been a bear, trying to be a bear in this low volatility, God bless you, because that didn't work out at all. And I know that there's a lot of people in pain on Twitter kept talking about, that they're just getting annihilated, and I know why. Um, so, get JAT's PT indicator, understand, the volatility is dynamic, and put yourself in a position where you can measure it. You know what level it's at, and you know whether it's going long vol or short. And then that can help you prepare for the market, and put together some tools in Bloodhound and Blackbird. Before I let you go, I want to go over to my website and talk about this current limited offer from Earn to Trade. Um, they have an opportunity to start a funded trading account challenge. They're TCP 25, and they're offering a 40% discount for that. So if you would like to try to get a funded trading account, it's a good time to come over here, start the trader career path. The 25,000 evaluation is currently on special for $90. So that's a great price. So that you just contact them if you have any questions, but the website, can fill you in on their requirements and put you in line to get to a funded trading account. I'm working on mine and did pretty well on Friday, so would like to see that continue. Um, and the volatility is a key component to this. I think we were talking about that the other day. So when you put your trading plan together, you might want to consider the JATS PT, because you can see if the volatility is low, and adjust your profit targets accordingly so you're not, trying to hit the bleachers each time. You take the targets at the when they hit their ranges on the daily or weekly or an intraday time period. JATs can break down all of those lower time frames as well for intraday trading and seeing those opening range breakouts. You're looking at high and low of a time between 1700 and 8:30. I can also give you a bell curve distribution for that that's outside that arbitrary high low that the algos trade to. So that is something that you may want to see. In fact, since I'm talking about it, let me just show it to you real quick. Just click the plus sign and you'll get a new chart. Put the ES on the chart. I'm going to start with a blank. Well, it's already on here, so I don't have to build it. Okay, so I'm going to add the opening range on the chat's opening range indicator, and I'm not going to show, well, I can show the pre-session too. Taking a minute to populate the indicator. Did it come on? Okay, here it is. Now I can see it. All right. So, the Globex range is in purple, okay? And then the orange is the 1 hour IB. And so you can see here when it broke the 1 hour IB, you were also on the PT 1 hour distribution, which was just above it. And that is where price took off from and went to the daily 3. So you had a perfect opening range breakout here. These purple lines are your daily ones. I don't know why I have them in purple on this. I guess I was just wanting to change it up. But that was your daily one. So it broke your 1 hour IB, tagged the daily one, came back to the daily one open close, came back and tagged the lower one, and then took off. So these are very common patterns. If you're going to have a range break day, it's got to break the 1. So you see here it went up to the 1 and acted as resistance, and it came all the way back down to the opposite 1 before coming back up. So it goes from 1 to 1 to 1 all the time. And then if you're going to break out, that's where these ranges come in. And there are many, many traders who trade these opening range concepts. If you have, here's a gigantic whirly bird where it went up to the daily one precisely. Do you see this? Went up to the daily one and then dropped back in and stayed inside this um, first hour of trading and balanced on that first hour. See that orange line? So that was an inside day. And the most popular intraday trading strategy is that opening range breakout. And whether you use a 1 hour opening range or a smaller time frame, you can do a 15-minute, a 5 minute, a 30 minute. But I think the institutions and a lot of the professionals will wait for that 1 hour to balance. And then if you get an outside day, you can participate or you can fade your levels intraday if you want to do some range scalping inside that range. But being able to follow your VWAP, these silver lines are my own personal volatility bands. I did my own version of a super trend, and it is pretty good. I mean, I like the way that I have set up my super trend. I do it differently than everybody else, of course. But what I like, I set it up, I like it this way. Harry Fat Tails helped me prepare my super trend just for me with my specifications. He did a great job. I appreciate that. Thank you so much. All right, guys, that's it for me. Look out for these levels that we just discussed. Might be getting a little bit frothy up here and might see some near term support resistance this week, in fact. All right, talk to you guys later.